Welcome to Earnings Recap. Today, we're covering McDonald's first quarter 2025 earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel. We basically summarize everything in plain English for you. And, McDonald's, right. The world's biggest restaurant company, over 43,000 spots globally. So in this deep dive, our mission is really to dig into their latest earnings report and that investor call that happened right after. We want to pull out the key financial bits and, get a clear sense of how they did and what they're thinking about the future.
Okay, let's jump right into those Q1 numbers then. So globally, their comparable sales, they were actually down 1.0%. But, and this is important, they pointed out last year had leap day, that extra day. If you account for that, global comparable sales were pretty much flat.
Ah, right. That leap day comparison definitely makes a difference. Always throws things off a bit year over year. We also saw total revenues were down, 3%? Or 2% in constant currencies, as they call it.
Exactly. And operating income followed a similar path, down 3% reported, but only 1% if you back out currency effects. And that figure included some restructuring charges they took.
Right, so if you pull those charges out, the operating income drop was a little less steep, like 2% down or flat in constant currencies.
Precisely. Taking those out gives a slightly clearer picture of the underlying operational performance.
Okay, so where did those sales shifts happen, looking at the different regions?
Yeah, drilling down is interesting. In the U.S., comparable sales actually dropped by a more noticeable 3.6%. And the main driver they highlighted was negative guest counts. Fewer people coming through the doors.
And again, got to remember that leap day effect from last year impacting the U.S. comparison, too.
Absolutely. Now, internationally, it was kind of a mixed picture. Their international operated markets, the ones they run directly, saw sales dip by 1.0% overall. Some markets, like the U.K., were notably negative.
But the story was different in their licensed markets.
Yeah.
The international developmental licensed markets.
Yeah, quite different. Those were actually up 3.5%. Mostly driven by, it seems, the Middle East and Japan doing quite well. Still need to adjust for leap day there, too, of course.
Okay, so pulling back for the big picture, comparing the key financials year over year, what do those numbers look like?
All right, so revenues for Q1 2025 came in around $5.96 billion. That's down from $6.17 billion in Q1 2024.
Okay.
Operating income was about $2.65 billion. Versus $2.74 billion last year. Net income also dipped, landing at $1.87 billion compared to $1.93 billion previously.
And that naturally flows down to earnings per share, the EPS number.
Yep. Diluted EPS was $2.60 for the quarter. That's a slight decrease from $2.66 last year.
Got it. Now, they also talk about system-wide sales. Can you remind us what that covers?
Sure. System-wide sales basically counts up the sales from all McDonald's restaurants, company-owned and franchise ones. It gives you a sense of the total brand footprint.
Okay. And how did that look?
That figure was down 1% overall, but interestingly, if you look at it in constant currencies, it was actually up 1%.
So currency headwinds played a role there, too.
Definitely. And something really striking within that, they mentioned sales just to their loyalty members. Across 60 markets with loyalty programs, that was over $31 billion for the last 12 months.
Wow, $31 billion.
And about $8 billion just in this first quarter alone.
Yeah.
It really shows how important those loyalty programs are becoming.
Absolutely huge. So what were the main reasons they gave for this quarter's performance, the headwinds?
Well, they pointed to a few things, both in the report and on the call. Definitely an increasingly challenging industry environment. Lots of pressure on consumers. They also mentioned some severe weather, mostly impacting North America, and of course that leap day comparison we keep mentioning.
Right, makes sense. Okay, so that covers the key numbers from the report itself. Let's shift gears to the earnings call. That's usually where you get more context, the management commentary.
For sure. And a big theme was the macroeconomic backdrop and how consumers are feeling. Management was pretty clear. It's a challenging time for the QSR industry. Economic uncertainty, consumers feeling squeezed. They even noted that geopolitical tensions seem to have dampened consumer sentiment, maybe more than they initially anticipated.
Interesting. And did they break that down by region or, say, income level?
They did, especially for the U.S. They described it as almost a divided economy. Traffic from lower-income consumers was down significantly. They said almost double digits.
Wow.
And middle-income traffic was down nearly as much. But on the flip side, higher-income customer traffic remained pretty solid.
That really paints a picture of who's feeling the pinch the most right now.
It really does. And it underlines why their focus on value was such a central part of the discussion.
Yeah, I bet. So what did they say about their value strategy?
They really hammered home their commitment to leading on value and affordability. talked about expanding their value options like the everyday affordable price menus, EDP, and entry-level meal bundles in their top 5 international markets.
And what about here in the U.S.? They relaunched the McValue platform recently, right?
Exactly. That kicked off in early January. Key parts are the $5 meal deal and the buy one, add one for $1 offer. It sounds like they feel pretty good about how the $5 meal deal is doing. They plan to keep that running for the rest of the year.
Okay.
The buy one, add one, though, they said it's performing okay, but maybe with lower incrementality.
Lower incrementality, meaning it's not necessarily driving extra purchases?
Yeah, basically. People might be using it, but it's not necessarily getting them to buy significantly more than they would have anyway, so maybe not the best use of their margin for driving growth.
That's a subtle but important distinction. So value is key, but they're analyzing which offers work best. What about new stuff? Menu innovation, marketing.
Big focus there, too. They highlighted this huge partnership with the upcoming Minecraft movie, called it their largest global campaign ever. And apparently, the initial response has been strong. Those collectibles flew off the shelves in the U.S. pretty quickly.
Minecraft is huge, so that makes sense. Anything else on the menu front?
Yes, McCrispy chicken strips. They launched those nationwide in the U.S. And interestingly, they said the initial take rate was positive even before any major advertising push.
Huh. Building on that McCrispy platform.
Exactly. And the strips will actually allow them to bring back snack wraps later this year, which people have been asking for, also leveraging that McCrispy chicken.
Ah, snack wraps. People will be happy about that.
Definitely. And don't forget, it's the 50th anniversary of McDonald's breakfast. So they had campaigns around that, like National Egg McMuffin Day and making bagels more available in places.
Lots going on. How are they managing all these initiatives? Did they talk about organization?
They did. They've created a new global restaurant experience team. The idea is to execute faster on these innovations and scale up tech advancements more quickly. Part of that involves a new category structure, dedicated teams for beef, chicken, beverages.
Ah, okay, so more focus on specific product types.
Right. Better accountability and focus, especially when they're up against specialist competitors, the chicken chains or the coffee shops.
Makes sense. Did they mention Cosmpiece, that separate concept they tested?
Yes, and it sounds like they got some valuable learnings, particularly on the beverage side. Things like customer interest in customization and the appeal of totally new drink categories. In fact, those learnings are leading directly to a U.S. test later this year within existing McDonald's restaurants, featuring new beverage items inspired by Cosmic Seas.
Interesting. So applying learnings from the test back into the main brand. Let's swing back to the international markets for a second. We heard it was mixed earlier.
Yeah, mixed, but with some positive signs despite the headline numbers. Like we said, the UK had negative comps. But in most of their major operated markets, they actually gained ground on competitors in terms of guest counts, which they attribute to their value platforms.
Okay, any specific examples?
France was a standout. They gained market share there for the first time in almost 3 years. Driven by value offers and some menu news, like something called the Big Arch.
And Germany?
Germany. They highlighted the McSmart Snacks Eat at Pay platform. It's helping them gain share, even though overall QSR traffic is contracting there. Canada also had positive comparable sales and guest counts. They pointed to a $1 coffee offer and a Hockey Showdown promotion.
So tailored approaches working in different places. But they acknowledge the UK needs work.
Yes, they were clear they need to improve execution there and plan to leverage strategies that have worked elsewhere. They're also seeing progress in Australia, despite industry traffic being down there too.
And the licensed markets. Middle East and Japan were strong. What about China?
China was described as stable, helped by increased delivery share and the success of value meals and their chicken offerings. So holding steady in a complex market.
Okay, let's talk profitability and outlook. What was the bottom line on earnings per share adjusted?
Adjusted EPS for the quarter was $2.67. That included a small $0.04 headwind from foreign currency translation. But compared to last year, adjusted EPS was actually up 1% in constant currencies.
Gotcha. And looking ahead for the full year 2025?
They reaffirmed the financial targets they set back in February. So no change to the overall goals for the year. What did change significantly was their forecast for currency impact. They previously expected a headwind, but now they think foreign currency translation will actually be a tailwind to EPS for the full year, maybe around $1.05 per share.
That's quite a swing. So overall sentiment, cautious but confident.
Pretty much. Cautious view on the consumer in the near term, given the pressures we talked about, but expressing confidence in their accelerating the arches strategy to drive guest count growth and gain market share over time.
And they usually mention their franchisees.
Always. emphasized the strength of that three-legged stool, franchisees, crew, supply chain, and how the local nature of the business, with franchisees rooted in their communities, is a core strength.
Right, and it's a big anniversary year too, isn't it?
Yep, 70th anniversary. They gave a little nod to their legacy of innovation and agility over the decades.
Okay, digging deeper into the U.S. specifically now, what's the outlook for the rest of the year there? It sounded like Q1 was tough.
Yeah, they expect momentum to build through the year. Q1 was really focused on getting that McValue menu embedded. They're encouraged by the response to Minecraft, the early signs from the crispy strips. The key now, they said, is world-class execution on value, marketing, and the new menu items.
And that assessment of the McValue platform components, $5 meal deal good, buy one, add one, maybe less so.
That's the gist. Feel good about the $5 deal's performance. The buy one, add one for $1 is just okay, maybe not the best investment for driving incremental traffic or margin, so potential adjustments could come there.
What about balancing value with regular menu prices? Did they talk about pricing strategy?
They did. Acknowledged mid-single-digit menu pricing increases in the U.S., but stressed the need to balance those value programs with full margin marketing and menu innovation. It's about disciplined pricing, working closely with franchisees on pass-through rates. They expect that pricing contribution to moderate as inflation cools down.
And does the heavy value focus impact margins in the short term?
Yeah, they expect some check and margin pressure from the value mix in the U.S. until they lap these introductions. But overall, for the full year 2025, they still expect slight percentage growth in U.S. McCapal margins compared to 2024.
Okay, so managing expectations there. They mentioned the UK struggles. Any more detail on what needs fixing?
Not a huge amount of detail, other than saying they aren't currently gaining share and opportunities lie in better execution. They seem confident they can revitalize it, pointing to the turnaround in France as a sort of template.
And the general decline in QSR traffic.
Yeah.
Where do they think people are going? Or are they just cutting back?
They seem to think it's more about cutting back, people being more judicious, reducing frequency, especially low and middle income groups. Not necessarily a big shift to, say, fast casual or full service, more like skipping occasions, maybe morning coffee runs, or replacing them with at-home options.
That makes sense. Now, this beverage focus seems interesting. Why the push there?
They see significant growth potential and, importantly, attractive profitability in beverages. They believe they can grab a bigger slice of that pie, using coffee share as an example of where they've succeeded.
And the Cosmex test helped inform this.
Yeah, it gave insights into how people like ordering customized recipe-driven drinks, but also the importance of having food available too. It's not just about the drink. So this upcoming U.S. test in regular McDonald's stores will explore an expanded lineup, hoping to drive incremental traffic and get people buying food with those drinks.
Is there any move towards more standardized core menu pricing across the U.S.?
Not really. They emphasized pricing is inherently a local decision. Depends on the specific trading area, the local competition. The focus remains on offering strong relative value. And with inflation hopefully easing, they expect less upward pressure on core menu prices anyway.
Okay. And the move into boneless chicken with the McCrispy strips. What's the thinking there?
That's a big growth area, the boneless chicken market. So they're re-entering with the strips, leveraging the halo effect from the existing McCrispy platform. Plus, as we mentioned, it enables bringing back snack wraps later, which hits a specific customer demand.
Got it. Can we just revisit the U.S. consumer segmentation? Low and middle income feeling the pressure.
Very much so. Low-income traffic down significantly, middle income also feeling it. High-income spending remains robust. And since McDonald's tends to over-index with low and middle-income consumers, those strong value offers are absolutely critical for them right now. They did make a point, though, that their comparable guest count gap versus the industry was positive in Q1, suggesting they're winning on a relative traffic basis.
How much is the McValue platform shifting the overall mix towards value items?
They said it's actually hard to generalize, because it's a mix of the national McValue offers plus all the local deals franchisees run through the app. But the broad McValue platform is key because it reaches everyone, not just the maybe 25-30% of customers actively using the app for deals.
Okay. There have been reports or discussions about international boycotts in some regions. Did they address that?
They did. Said they haven't seen any change in how consumers globally feel about the McDonald's brand, despite acknowledging a general uptick in anti-American sentiment in a few specific markets, like Northern Europe or Canada. But importantly, they said that sentiment hasn't actually impacted their business results. They really lean on the franchise model here, local owners, local operators, as a key strength buffering them from that.
That's an interesting point about the local ownership model. What about the pace of innovation? Can they keep up this stream of marketing and menu news?
They seem confident. Said they have a steady flow planned throughout the year and expect these things to positively impact the baseline business even after the initial promotion buzz fades.
How do they handle adding new items like strips and wraps without complicating things in the kitchen? Speed of service is key.
Good question. They actually highlighted that the U.S. business has done a lot of work simplifying the core menu over recent years, which has improved execution and customer satisfaction. So building onto the McCrispy platform, which is already established, is less complex than introducing something entirely new. They pointed to all-time high customer satisfaction scores in the U.S. in Q1 as evidence that execution is strong.
And finally, competing against those specialists, the chicken places, the coffee shops, how do these new category teams help?
The idea is those teams, beef, chicken, beverages, provide dedicated global focus on winning in each specific vertical. It's not just marketing. It involves supply chain, equipment, restaurant processes, all working together under category leaders. But the actual execution still happens at the country level, so it's meant to be a powerful combo of global strategy and local implementation to take on those specialists more effectively.
Okay, so let's try and summarize the key takeaways here. It seems McDonald's definitely navigated a challenging first quarter. Those macroeconomic pressures, especially on lower income folks in the U.S., were clear.
Yeah, absolutely.
Yeah.
But they're leaning heavily into value with the McValue platform. And they've got things lined up like the Minecraft campaign, the McCrispy strips, snack wraps coming back, which gives them some optimism for improvement through the year.
And strategically, that reorganization into global category teams, plus the learnings from Cosmic Seeks feeding into their beverage plans, it signals they're being pretty proactive about finding future growth, especially in areas like drinks.
Right. So it leaves you thinking, given that stark contrast in how different income groups are behaving, how might McDonald's need to further tailor its offers? Can they effectively reach both the super value conscious and the higher spending segments if this economic uncertainty continues?
That's a great question. And what about that sharper focus on specific categories like chicken and beverages? What could that mean for the wider QSR landscape and how those specialist brands might have to respond? Something to keep an eye on.